Let's talk GameStop for eBay. This is all the rage in capital markets today because meme stock Wall Street is taking over mainstream Wall Street capital finance. And in this situation, it's the minnow swallowing the whale. And I think there's a lot of disbelief because it's GameStop, but there are great examples like when Eldorado bought Caesars of the minnow swallowing the whale. Now, a couple of other items that I want to walk through in this video is this idea of let's invoke Burton Malkiel in his book, Random Walk Down Wall Street and Greater Fool Theory. I think that's really at play here. And I think what's going on is that Ryan Cohen wants to build an asset that's at the same size and scale of Fanatics because of this sports card cash grab. And this gets us back to Burton Malkiel, that we're either at peak Greater Fool Theory because you've got people like the rapper Drake or Paul Skeens or Kevin O'Leary, buying cards for millions and millions of dollars that 10, 15 years ago were not worth nearly that much. And I know they're rare, but the question is are these prices sustainable, and are there other bidders willing to pay for this? Because I think one of the key issues that you see in this collectibles market as you look through YouTube and Instagram is that there's a lot of retrading to drive values higher. There's a lot of instances where these high dollar cards are not being sold for cash. They're being retraded every couple months to walk the market higher. So let's get into the offer. And the offer here is that GameStop is offering $56 billion for eBay. And as Ryan Cohen said numerous times, it's a 50-50 cash stock deal. And much to CNBC's chagrin, the math doesn't seem to math. And I think this is the key point. In these situations where the minnow swallows the whale, the math rarely maths at the beginning of the process because the minnow is the one buying the bigger entity. There's going to be a cash hole. And so this gets into the key issues here of, do we get this deal done? And it starts with, is it really going to be a 50-50 cash stock deal? And does it really matter? I think ultimately, if you can do more stock, you close that amount of cash needed at close to get this deal over the finish line. And I think the reason this deal gets done and is so thoughtful on Mr. Cohen's part is the identification of almost $3 billion in synergies at eBay in sales and marketing. And to his point, in this collectibles market, the brand eBay and GameStop are so ubiquitous and well-known, you don't need to market them to continue to generate the revenue that goes through these platforms. Like, you have to go to eBay or GameStop. And the real key in this deal that no one has talked about is the eBay shareholders and whether numerous large eBay shareholders are willing to roll their stock into the GameStop acquisition and stick with Mr. Cohen. And I think because of these synergies, just like with Caesars and Eldorado, people were willing to bet on Tom Reeg and the idea that he could cut, headline $500 million and ultimately $2 billion in synergies from Caesars in that acquisition. Same applies here. I think investors are going to believe that Ryan Cohen can get these $2.5–3 billion in synergies from eBay, and they will roll with him. And that's why they're going to be able to make the math when it gets to the finish line. Thanks for watching.